Afternoon all. My name is Vilijia Robinson. I'm an investment manager at Palisade Impact. Before I joined Palisade Impact, I spent 5 years at Palisade's infrastructure investment team focused on energy, circular economy and ESG. Steve Gross, our CEO, wishes he could be here today. He sends his apologies. Unfortunately, his mother is unwell, and so he's had to stay close to home in Melbourne this week. But I'm here, and I'm very excited to talk to you about Palisade Impact today. Palisade Impact is a natural extension of Palisade's infrastructure investment platform, enhanced by a team that has experience investing in next-generation infrastructure, growing businesses, and impact investing. What are we doing? In a nutshell, we're investing in infrastructure-like assets in businesses where positive impact on people and planet enhances financial returns. We're building a diversified platform of investments through the Palisade Impact Fund, and we're lucky enough to be able to leverage Palisade and Pinnacle. We're using the same systems and investment infrastructure to manage our business. A few facts about Palisade. Palisade has been investing in Australian mid-market infrastructure for over 10 years. Palisade has $3.5 billion of funds under management, manages 26 assets through 3 pooled funds. As I said, we're leveraging the Palisade platform, and this includes access to technical expertise across energy, circular economy, and digital infrastructure. So back to impact. We've founded the platform with a team experienced in next-generational infrastructure, growing businesses, and impact investing. Steve Gross and Jeremy Wernett are the co-founders of the business. They have a wealth of experience and very strong networks in the space. They've both held very senior roles at Macquarie. Steve was Global Head of Impact Investing. Jeremy was Head of Macquarie Capital Asia. Todd Smith and I both have strong sector and functional expertise. Todd has spent time at Macquarie, Sydney Airport, and also founded a not-for-profit. As I said, I've spent the last 5 years at Palisade in the infrastructure investment team, focused on energy, waste, and ESG. So what types of investments are we looking at? We describe it as next-generational infrastructure supporting the race to zero. And when we talk about the race to zero, we're focusing in on 3 key areas: net zero emissions, zero waste, and zero inequality. And when we talk about inequality, we're talking about access to essential services and to infrastructure. And I'll touch on an example of that later on when I talk about digital infrastructure. So in terms of how we look at impact and making an impact when we invest, we've developed an impact assessment framework with the support of Tideline. Who or what is Tideline, you ask? Tideline is a US-based global leading impact advisory firm. They've helped us set up both the impact framework, but also help us diligence all of our new investments for impact when we're looking at them. As you can see, we focus on 3 things which every investment must meet. One is that investment focuses on an identified challenge, and for us, that's with reference to the race to zero. 2, the investment and our capital must positively help address that challenge. And thirdly, it should result in an impact. So let's touch on the opportunity set next. We've mapped the investment required to meet the race to zero. And in Australia, there's over $450 billion required to meet this challenge, which is a lot of money by anyone's standards. But we're seeing a limited amount of capital chase these types of opportunities because they're generally falling between the gap of what is traditional infrastructure and what is growth equity. Palisade Impact's capital is differentiated though. We're longer term and we're patient. We're focused on higher growth and a desire to de-risk. And we're also there driving positive change for people and planet as we invest. Our investment philosophy is threefold. Number one, we focus on businesses that address the race to zero and where we can actively contribute to that challenge or that race. Next, we focus on next generational infrastructure with some key characteristics in mind. And there's three that I'll touch on now. One, we're typically investing in companies that own distributed infrastructure. Two, they're companies where the infrastructure is enabled by policy or technology. And thirdly, we're focusing on higher growth businesses, but where the growth is supported by modular infrastructure investment, which typically has a faster payback period than what you would consider to be traditional large-scale infrastructure. The third part of our investment philosophy is around active management, which has been a key theme throughout today's presentations. For us, that's focusing on growth and managing risk. When we talk about growth, we're talking about organic and inorganic growth, which we can support through, for instance, introducing our businesses to potential customers within our network, but also supporting businesses to acquire bolt-ons and also through development projects. When we talk about managing risk, we're talking about protecting the downside. And that can take a number of different forms. And that includes, for instance, the actual instruments which we're using to invest, which might not look like traditional equity, or it can also be the actual businesses which we're looking to invest in. So I'm pleased to announce we've closed 2 deals in the last couple of months, Gigacom and EcoSave. And I'll tell you a little bit about Gigacom now. One of the largest challenges in Australia is quality of digital connectivity. Australia lags against its peers. If you've ever sat at home in the last 2 years in front of your computer screen and had all your Zoom screens freeze at the same time, then this might resonate for you. From an impact perspective, there's a high correlation between digital access and other measures of well-being. Digital connectivity is imperative for the modern world, for education, for work, for social connection. And we've seen evidence that lower socioeconomic groups are generally less digitally connected. Gigacom is a next-generational digital infrastructure business. It's using technology that's common in Europe and the US, enabling gigabit speed connectivity for a fraction of the cost. Gigacom owns the networks that it operates, and it also provides services to its customers. The way the business is structured enables significant impact. Gigacom will be providing its service to social and affordable housing residents as part of its rollout, providing better and cheaper connectivity. I'm now going to address our investment strategy. Our investment strategy starts top down. We're focusing on the sectors where we think we'll be able to have the highest impact and the strongest financial returns. We map the key players in those markets and use our networks to speak with those players. From there, developing proprietary investment opportunities. In addition to Gigacom, we've recently closed EcoSave. EcoSave is an energy-as-a-service company investing in distributed infrastructure that allows businesses become cleaner and more energy efficient. What we really like about EcoSave is that it's focused on both the demand and the supply side of the energy equation. In addition to those deals which we've recently closed, we're currently looking at 2 projects, and sorry, I'm totally standing in the way. We're looking at Project Bessie and Project Earth, and yes, deal code names, not real business names. And we also have a number of opportunities that we're currently screening. So it's a really interesting time to be looking at these sectors, which kind of been mentioned by everyone today. But I'm also personally very excited about the opportunity to map and marry up commercial returns and positive impact for people and planet. Thank you.